Let's move on and talk about Amazon as well. Look at the shares today under pressure following a Wall Street Journal report that the company has changed its search algorithms to favor products with higher profit margins instead of customer relevancy or bestseller status. Sold off nearly 2% today. An Amazon spokesperson told CNBC it did not change search results to include profitability. It did acknowledge that long-term profitability is a factor it uses when evaluating new search features. Bueller.
Oh, you're looking towards me? I thought we were going to Guy on this one.
She was looking at you. I was looking at you.
Oh, sorry, I was looking at the whole thing on Amazon. You know what?
Really jumping in on this Amazon one.
I still look at Amazon. I'm probably the only guy on the desk who thinks this, but I look at it and I see an incredible valuation in terms of height of where it is. So I'm a little bit not as bullish as probably most of the people on the desk. I've missed this run. I continue to miss the run because I still think this is a company that's literally not what everybody thinks it is. This is a cloud company. They're the best and the biggest that exists. And this is all just a sideshow on the other side of things. So these things, I think, don't matter as much to me as the entire cloud world, where they AWS, which is still king, over Microsoft and over all the rest of the
Well, you can make the argument that cloud is actually less and less important when you think about the competition that's coming in. Obviously, the pie keeps growing, but their share keeps diminishing. Their profitability has been steadfast, and that's one of the reasons why this stock is still, around.
But that's where they make their money, Dan. Right?
No, I understand, but I think back to this story. What's really interesting is that this third-party selling, some of the deals they've done with brands like Nike on their platform. This is going to be the future of their business. Why did they buy Whole Foods? They're doubling down on retail. They want retail to become more profitable. They've used AWS profitability to help them kind of sustain some of the losses and the other stuff. But, this is a company that's going to do over $200 billion in sales. They are just a few percent of U.S. consumer spending, and they have an avenue to become much bigger. So to me,
bigger with low margin. That's the problem.
I'm not arguing to buy it. You can make the argument if you pulled up a chart, it just broke below the uptrend that had been in place from the December. The chart looks broken to me. So near term, stories like this aren't good for sentiment, and it only adds to the potential for regulatory issues because this is the sort of thing that a lot of people are going to squawk to Congress about.